This is Bob Schmidt with the Brandis Institute. Today I'm going to explore aspects of high-frequency trading, market structure, and regulation. And to help me do that, I'm joined by Joe Scafidi, Director of Trading at Brandis Investment Partners and current member of the Brandis Institute Advisory Board. Joe, thanks very much for being here. Since Michael Lewis's book Flash Boys has been published, I've seen so much in the financial press about high-frequency trading, pros and cons. What is your definition of HFT, and what are your concerns with it?
First of all, HFT is a broad term. It's a broad stroke for a lot of technologies and strategies which exist in the market. Simply put, HFT is automated proprietary trading strategies which rely on low latency technology to execute their orders. So it's the electronification of the markets which have been taking place for years. The issue is the various types of strategies which exist. There are the predatory ones, which many in the market feel are working against long-term investors, and there are ones who actually do benefit the marketplace and have a place in it.
So when we talk about high-frequency trading, I've heard some people say, it's a penny here, it's a penny there, so what? You know, who cares? How would you respond to that? It's
not just the penny. Again, that's part of it. You know, in fact, I would argue that the penny is the smallest part of it. So that's something we can quantify. And if you really look into some of the strategies which exist, you can probably quantify that transfer of wealth, that effective tax that Michael Lewis speaks about in the book. So if it's with participants who are bringing something, so if it's intermediaries who are bringing something positive to the market, maybe that's justifiable. But some could argue, and I argue, that many of these people are unnecessary intermediaries in the market, so that's an unnecessary tax. Take it to the next step, it's the unquantifiable. There are strategies which exist which can pick up signals. If they have an advantage with co-location or other things that we can get into and you can read about in white papers, that's unquantifiable. Moving a name, a stock, 2, 3, 4, 5 cents against you. Now, do people care about that? You know, I find it funny when I hear some people saying that, who cares about a penny or 2 pennies? They always look at our commission rates, 2, 3 cents. Right. All of a sudden, these 2, 3 cents don't matter. And then finally, more than anything, it's the complexity of the market and how fragile it can be. It's getting increasingly complex, and that worries me and others.
In the book, Michael Lewis talks about Brad Katsuyama and some of these oddities that he noticed while he was trading. Did you and other Brandis traders experience the same things that he saw? And if so, when did that happen, and what did you do about it?
Yeah, I believe the book referred to around 2007, 2008, shortly after Reg NMS was implemented. I joined Brandis in April of 2007 on the desk in 2007 and 2008. We did notice the same things that Brad speaks of in the book. And it was around the same time when a lot of the firms were coming through with all their electronic offerings. I quickly figured out that the market's becoming more complex. And I'm a trader of 23 years, and the markets were changing. And the way to analyze them, the way to know if you're using the right brokers, having a good experience, was going to change. At that same time, we were rolling out a new order management system here at Brandis. Part of that team, we had a business analyst that was part of the rollout, who I felt would be a great member of our team. As I simply said to him at the time, is you speak technology, there's a whole group here, a whole new division on the sell side that we need to address. So we actually added a new role on the trading desk in 2008. Specific responsibility it was to engage with that side of the buy side, of the sell side, the electronic side, and to become an expert in market structure.
So how did you first get in contact with Brad? Did somebody at RBC contact you, or did you contact somebody at RBC?
So we've had an existing relationship with Royal Bank of Canada at that time, both on the high touch and the low touch side. They were another firm that were offering electronic services to Brandis. And all through this, we were trying to educate ourselves about the differences in the offerings from the brokers. They all had these fancy names. That's the one thing we recognize, are all these fancy names for the technologies, Dagger, Gorilla, and all these aggressive type strategies, but we really need to learn more about it. And RBC was one of the firms that helped explain the story to us in simplistic terms, and they were also unconflicted. We recognized early on that they didn't have their own proprietary dark pool, so their internalized engine. So their approach right from the beginning was different. They were helpful to our team in explaining some of the things we didn't understand.
Okay, so Brad goes on to help form the IEX group. Can you talk a little bit about Brandis's relationship with IEX?
So again, it existed really going back 2008. So the core of IEX were a bunch of people, 4 people I think initially, who left Royal Bank of Canada. So our relationship with them and the trust that we built up with them, and I think it speaks in the book, it's not just our opinion. It's a group of individuals who a large majority of the buy side felt represented them in a fair way, was answering questions we couldn't answer. Would ask these questions to other banks and you get 5 different answers. It was starting to make sense to us. So again, 2008 through 2012, existing relationship. We knew Brad, we knew Ronan and other players there. 2012 comes up when Brad resigns. The day he resigned, he gave me a phone call. He calls up and he explained what he was doing and what his venture was, and we thought it was a great idea. And over the next 7 months, we talked about it internally and ultimately decided to back them.
In the book, there's a chapter, Army of One, and Michael Lewis describes 16 people go to Manhattan, meet with Brad, and he shares with them things that he's discovered in the first months after launching IEX. I know you were at that meeting. What do you remember? How'd you feel? And were there anything in that meeting that wasn't reported in the book?
I think Michael touched on most of the meeting and the important parts, and it was actually fascinating reading it because I go, oh yeah, I remember that now, and I remember that now. And I think maybe the sequence was a little bit off. That's the only thing I would say is the sequence and how I report it in the book. But there were participants in there who were angry because it was the first time they were hearing these things. And I think IEX team, once they became a live ATS, or they had their own dark pool effectively, that they were able to look at data and they actually had an even different view than they did prior. In fact, I think Brad, and it's framed again in the book, he shared with us that day he was less angry with, quote, HFT, the participants in that, or the predatory size, as he was to how frustrated with some of the big banks, some of the exchanges, and simply the regulation in the market that allowed it.
So along that line, is there anything else in the book that hasn't been highlighted, or are there inaccuracies that you'd want to correct?
I am sure, I'm not the expert, I'm sure that maybe there are potential inaccuracies in the book, or maybe they don't explain it or don't go deep enough. And I don't think that's the point. You know, it's not about, is this the most accurate book on the way the market works. There are white papers out there you can read. There's the book Dark Pools by Patterson, which I think is a fantastic book on explaining the evolution of the markets and electronic side of it. Again, more importantly, the point that I think Michael brings up is the complexity of the market, how crazy this is. From the outsider looking in, you talk to somebody who's not in this industry. And that's the thing, the feedback I've gotten from friends, even outside the industry, or that are in the industry but not connected to that side of it, they're angry. I mean, they're really angry about how this is taking place and how complex it is. So my concern is the complexity of things, and that's what I think people should focus on. And the last bit that I think IEX is trying to address is bring fairness, to institutionalize fairness again in the market.
Great. Joe, thank you. Thanks very much. This is Bob Schmidt with the Brandis Institute, joined by Joe Scafidi. Thanks for watching.